What if the next trillion-dollar industry isn't something you can download, but something that physically moves in the real world? What if the real AI revolution isn't happening on your phone screen, but 3,000 meters underwater where no human can survive? And what if a tiny robotics company that most investors have never heard of is quietly positioning itself in that exact space for 2026? Today we're talking about Nauticus Robotics, a company that sits at the intersection of robotics, artificial intelligence, and offshore energy infrastructure. And by the end of this video, you're going to understand not just the massive upside people are starting to notice, but also the hidden risks that almost nobody talks about. Because this is one of those stocks that looks confusing at first glance, almost easy to ignore. But when you start connecting the dots between AI, automation, offshore energy, subsea infrastructure, and the future of how humans maintain critical assets underwater, it starts to look like a company that could be early in a very big trend. In this video, we're going to break down why robotics and automation are becoming essential in industries most investors overlook, why Nauticus is trying to disrupt a decades-old, extremely expensive system, what could drive serious upside into 2026, and the very real risks that make this a high uncertainty, high volatility story. So if you're someone who likes finding themes before Wall Street fully prices them in, you're going to want to pay very close attention. To understand Nauticus, you first have to understand a simple truth. There are trillions of dollars worth of infrastructure sitting underwater right now. Oil rigs, gas pipelines, offshore wind foundations, communication cables, subsea equipment, and energy systems that power entire countries. And maintaining this infrastructure has always relied on one thing: human divers and large, expensive support vessels. For decades, when something needed to be inspected or repaired underwater, companies would send divers down in dangerous conditions, or deploy massive remotely operated vehicles from ships that cost tens or even hundreds of thousands of dollars per day to run. It's slow, risky, and incredibly expensive. But until recently, there wasn't a better option. This is where robotics, AI, and autonomy start to change the game. Instead of sending a full crew, a giant vessel, and human divers, what if you could deploy an autonomous underwater robot that can inspect, map, and even perform tasks on its own? What if AI could analyze data in real time, detect issues before they become failures, and reduce the need for human intervention almost entirely? That's the world Nauticus is trying to build. Their focus is on autonomous subsea robots and software platforms that allow these machines to operate with minimal human control. These aren't just simple remote control devices. The goal is autonomy. Machines that can make decisions underwater, navigate complex environments, and perform work that today requires large crews and high operational costs. And this is happening at a very interesting time in the market. Offshore energy is going through a transformation. Oil and gas companies are under pressure to reduce costs. Offshore wind is expanding rapidly. Subsea cable networks for the internet and power transmission are growing. And at the same time, there's a labor shortage for skilled divers and offshore workers. The industry is actively looking for ways to automate. So when investors hear AI and robotics, they often think about humanoid robots, warehouses, or self-driving cars. But the underwater world is one of the biggest untapped opportunities for automation, simply because it has been so difficult and expensive for humans to operate there. Nauticus is positioning itself exactly in that gap. Now here's where the story gets interesting for investors. This isn't a company trying to create a brand new market. The market already exists. Companies are already spending billions every year on subsea inspection, maintenance, and repair. Nauticus is trying to take a slice of that existing spending by offering a cheaper, safer, and more automated solution. Think of it like this. They're not convincing customers to do something new. They're convincing them to do the same thing, but with robots instead of humans. And that's a much easier sell. If an offshore operator can cut vessel time by half, reduce crew size, lower risk, and still get the job done, the economics become very compelling. Over time, if this model proves reliable, it could shift how the entire industry operates. This is why some investors see massive potential into 2026 and beyond. Because once autonomy works reliably underwater, it's not just about one contract or one customer. It becomes a new standard of operation. But here's the part most people miss. Nauticus is still early, very early. And that's where both the opportunity and the risk come from. The company is not a large, profitable robotics giant. It's small, developing, testing, and trying to prove its technology in real-world environments. That means revenue can be inconsistent. Contracts can take time. Cash flow can be tight. And the stock can be extremely volatile. This is not the kind of stock where you look at earnings and say, wow, this is a stable business. This is the kind of stock where you look at trends, technology adoption, and whether the company can survive long enough to see the industry shift in its favor. And that's a very different mindset. You're not investing in what the company is today. You're evaluating what it could become if autonomous subsea robotics becomes mainstream. Another key factor here is timing. AI and robotics have reached a level of maturity where autonomy is becoming practical, not theoretical. Sensors are better, machine learning is better, battery technology is better, communication systems are better. All the pieces that were missing 10 years ago are now coming together. So Nauticus isn't trying to do this too early. The technology ecosystem around them is finally catching up to the vision. At the same time, energy companies are more cost conscious than ever. After years of volatility in oil prices and rising operational expenses, they're looking for efficiency. That creates an environment where a solution like this is not just interesting, but desirable. And this is where you start to see why 2026 could be a meaningful period. If over the next couple of years, Nauticus can demonstrate successful deployments, secure more contracts, and prove reliability, the narrative around the company could change significantly. Instead of being seen as a speculative robotics play, it could start being viewed as a practical solution provider in a massive industry. But let's talk about the hidden risks, because they are very real. First, execution risk. Building autonomous systems that work flawlessly underwater is extremely difficult. Harsh environments, pressure, visibility issues, unpredictable conditions. If the technology fails or underperforms, customers will not tolerate it. Second, financial risk. Small robotics companies often burn cash while developing their systems. If funding becomes an issue or if they need to raise more capital, it can dilute shareholders and create pressure on the stock. Third, competition. Nauticus is not the only player in subsea robotics. Larger companies with more resources are also exploring automation. If bigger players move aggressively into autonomy, Nauticus will have to prove it can compete. Fourth, adoption speed. Even if the technology works, large industries move slowly. Offshore operators are conservative. They need proof, reliability, and time before fully trusting new systems. That means growth may not be as fast as optimistic investors hope. This is why this stock sits in a very unique category. It has the ingredients of a potentially transformative story, but it also carries the uncertainty of a young technology company trying to disrupt an established industry. And this is where long-term thinking becomes important. Historically, many of the biggest returns in the market didn't come from companies that looked safe and obvious at the beginning. They came from companies that were solving a real problem in a way that didn't make sense to everyone at first. When Amazon was building warehouses everywhere, it looked expensive and risky. When Tesla was trying to make electric cars mainstream, it looked uncertain and capital intensive. When NVIDIA was focusing on GPUs for gaming, nobody saw AI coming. The common theme is this: early stages look messy, and the numbers don't always look perfect. The story takes time to unfold. Nauticus could be one of those early stage stories in subsea robotics, or it could struggle to reach scale. That's the honest reality. But for investors who like following long-term trends in AI, robotics, and automation, this is a company that fits directly into that theme in a way that most people aren't even looking at yet. Because while everyone is watching humanoid robots and self-driving cars, Nauticus is focused on a world that is literally out of sight, underwater, where automation may actually be adopted faster because the alternative is so dangerous and expensive. And that's a powerful idea. If you start thinking like this, you begin to realize that the future of robotics isn't just in homes, factories, or streets. It's in oceans, energy fields, and critical infrastructure that the world depends on every day. This is why some investors feel they are early when looking at a company like this. They're not chasing hype. They're looking at where automation makes the most economic sense first, and the underwater world is a perfect candidate. As we move toward 2026, what will likely matter most is proof. Proof of contracts, proof of successful deployments, proof that customers are saving money, proof that autonomy works in real-world conditions. If those proofs start stacking up, perception can change very quickly. And small companies in niche industries can sometimes re-rate dramatically when the market realizes their relevance. But patience is key. This is not a fast story. It's a slow, unfolding one tied to technology validation and industry adoption. And for long-term investors who enjoy spotting these themes early, following Nauticus can be intellectually and strategically interesting, even if you approach it cautiously. Because at the end of the day, this isn't just about one stock. It's about understanding where robotics and AI may have their biggest real-world impact. And sometimes, that impact is in places most people never think to look. So the real question becomes, are you only watching the obvious AI plays everyone talks about? Or are you also watching the quiet, unconventional ones that could benefit from the same technological wave? That mindset is what often separates early observers from late followers. As we wrap up, remember this is a story of potential, not certainty. A company operating in a tough environment, trying to change how a massive industry works, at a time when technology finally makes that change possible. There are risks, there is volatility, and there is a lot that still needs to go right. But there is also a clear trend toward automation, a real economic problem being solved, and a timeline where the next couple of years could be very telling. If you enjoy learning about these kinds of forward-looking themes in robotics, AI, and future technologies that could shape investing over the long term, make sure to like this video, subscribe to the channel, and let me know in the comments what you think about subsea robotics and whether this is a theme you're watching. Because sometimes the biggest opportunities aren't the loudest ones. They're the ones quietly operating far below the surface, waiting for the world to catch up.